Why is the price of gold increasing and what moves gold prices? In this video, I'll be covering all of that and I'll be sharing with you the two main reasons why the price of gold is increasing now. If you are interested in learning all of that, make sure you stick around in this video. Let's begin by taking a look at what is going on with gold right now. Last week, gold hits $2,000 an ounce for the first time ever. And if we take a look at the price chart of gold, in the past couple of weeks and months, we see that gold prices have been steadily increasing over time. In fact, gold has actually risen parabolically in the most recent weeks over here. To understand the developments of gold and what is going on with gold right now, we first need to take a look at what gold is and its background. Gold is just a metal and by itself, it has no intrinsic value. What this means is that gold's value is a social construct and it is only valuable because people agree that it has value. So for example, if we compare gold to another metal, say iron, the reason why gold is more valuable than iron is because people agree that gold is more valuable than iron. And that is why gold's value is a social construct and by itself, it has no intrinsic value. However, with that being said, gold has actually some symbolic value since ancient times. So if we go back in history, we'll see examples of ancient civilization placing value on gold. And some of these examples are the Egyptians and the Incas. On top of its symbolic value, the relative scarcity of gold also adds to its perceived value. So although gold has no intrinsic value, its symbolism and its relative scarcity means that gold has been used as money for exchange and a store of value. An example of gold being used as money for exchange and a store of value is the gold standard. What is the gold standard? The gold standard is whereby a country sets a fixed price for gold and buys and sells gold at that price. So for example, if a country sets a fixed price for gold, say $35 an ounce, what this means is that if you hold $35 of that country's currency, you can exchange that $35 for 1 ounce of gold. Britain and the US are some countries that use this gold standard in the past. So why do countries use the gold standard? One of the reasons why countries use the gold standard is because it allows countries to control the issuance of money. And the way countries uses this gold standard is to only issue money or its currency if it has the gold to back it up. So the more gold the country possesses, the more money and currency it can issue. And it works the other way too. So the lesser the amount of gold a country possesses, the fewer the amount of money or currency that country can issue. And that was the gold standard. However, countries now no longer use the gold standard. The US went off the gold standard back in 1971. Where President Nixon took the US dollar off the gold standard. So right now we are living in a fiat money system, where the value of currency is not backed by a physical commodity such as gold. Because money and currency is not backed by a physical commodity right now, technically there's no limit to the amount of money that a country can print or issue. Okay, that's a quick overview of gold and money and their relationship with one another. Now that we have a better understanding of those things, let's take a look at the two main reasons why is the price of gold increasing. The first reason why the price of gold is increasing now is because of the excessive printing of money. Earlier on, we touched on the history of gold and money. Although countries have taken their currency off the gold standard and severed the links between gold and their currency, gold still has a very close relationship with money, especially the US dollar. Gold and the US dollar generally share an inverse relationship. What this means is that when the value of the US dollar rises, the value of gold tends to fall. And when the value of the US dollar falls, the value of gold tends to rise. So gold generally has an inverse relationship with the US dollar. And the reason why gold has a close relationship with the US dollar is because the price of gold is dollar denominated. So over the long term, generally a declining dollar means rising gold prices. When there's excessive printing of money, in this case the US dollar, the value of the dollar tends to fall. And since the dollar shares an inverse relationship with gold, the excessive printing of the dollar will cause the value of the US dollar to fall and thus cause gold prices to rise. In history, there are three periods where there are excessive printing of money in the US. The first is during the Great Depression between 1929 and 1930s. The second is during the Great Financial Crisis of 2007 and 2008. And the most recent one was during the pandemic of 2020. Throughout these three periods, the US Federal Reserve implemented the quantitative easing program or the printing of money. So in these three periods, there were excessive printing of money by the Fed to conduct its monetary policies. And it is of no coincidence that during these periods, the price of gold rose significantly. And if we take a look at this chart here of gold price history, we can chart the rise of price of gold during these periods. The first period that we'll take a look at is during the Great Depression. The Great Depression period lasted from 1929 to the late 1930s. And if we take a look at the price chart for gold during that period of time, you'll see that the price of gold rose significantly during those years. From February 1929, we go along, and you can see that the price of gold rose significantly during this period. The next period that we'll take a look at is the financial crisis period between 2008 and 2009. So we'll take a look at 2008 and 2009. So on this chart over here, you'll see that here is around August of 2008. And you'll see that in the subsequent months after the Fed has implemented its quantitative easing program, look what happened to the price of gold. The price of gold rose significantly during that period. The last period that we'll take a look at where there was excessive printing of money is during the pandemic period of 2020. So the pandemic started around 2020 and the Fed responded by implementing its quantitative easing program in March 2020. So if you take a look at the price chart on February 2020, the price of gold at that time was 1.6k. And after the Fed implemented its quantitative easing program by printing more money, the price of gold increased substantially all the way to 1.9k. So the first main reason why the price of gold is increasing now is because of the excessive printing of money by the US Federal Reserve. And because of this excessive printing of the US dollar, the value of the US dollar will decline and consequently the price of gold will rise. That is the first reason why the price of gold is increasing now. The second main reason why the price of gold is increasing now is because of the political and economic uncertainty. And during such periods of uncertainty, people tend to turn to gold. And if you take a look at this article here, during periods of geopolitical uncertainty, gold price surges. And if you take a look at another article back a while ago, the fear of war because of the escalating US and Iran tensions sends gold to highest price since 2013. So when there's periods of uncertainty, be it political or economic, gold prices tend to rise. And you can see the relationship between uncertainty and gold prices on this chart here. On this chart here, we have the price of gold plotted against the VIX. What is the VIX? The VIX is used as a fear gauge or fear index. And investors use the VIX to measure the level of risk, fear or stress in the market. During periods of uncertainty, the VIX tends to spike. If you take a look at this chart, there were two instances where the VIX spiked. The first instance is during this period over here, and the second instance is during this period over here. During these two periods where the VIX spiked, there was huge uncertainty in the markets. The first instance where the VIX spike was during this period over here, and this period was during the 2008 financial crisis. And during that financial crisis, there were huge uncertainties in the markets. And that is why you see a high reading on the VIX during that period of time. And take a look at what happened to the price of gold after the VIX spike. You see that from here in 2008, that the price of gold started to rise substantially during this period over here. The second spike in the VIX was during the pandemic period of 2020 over here. And after the VIX spike, notice what happened to the prices of gold. The prices of gold starts to increase over here. So during periods of huge uncertainties in the market, the price of gold tends to rise as we have seen on this chart here. And on the other hand, during periods of relative certainty in the market, such as during this period over here, prices of gold tend to remain stable, right? So during periods of relative certainty in the market, prices of gold tend to remain quite stable. And during periods of huge uncertainties in the market, prices of gold tend to rise. And that is the second main reason why the price of gold is increasing now. Because right now we are hit with a double whammy of political and economic uncertainties in the markets. And that is why the prices of gold has risen almost parabolically during the recent weeks. So the combination of these two main reasons, the first being the excessive printing of money by the Federal Reserve, and the second because of the huge political and economic uncertainties in the markets, has caused the price of gold to increase substantially during this period. If you have liked and learned something from this video, smash that like button because it will really help the algorithm and allow me to produce more content such as this. And if you haven't already, make sure you subscribe to this channel because you don't want to miss out on future videos such as this, where I talk about investing, trading, and the stock market. So subscribe to this channel and I'll see you in those other videos. To your financial success.